This is CBX Business News. The business news headlines are brought to you by QMax Wealth Management, making more possible. An economic contraction, billions in capital targeted, and cost relief measures in Australia. Good evening and welcome to CBX Business News for Wednesday, April 1, 2026. I'm Rashel Moncrieffe. Thanks for joining us. Coming up, Jamaica's economy contracts by more than 7%, with growth stalling at just 0.1% in the final.
First quarter of 2026 is almost over. The plans are made, goals were set, but are you really executing? I'm Rondine Williams, and I sat down with global strategist and founder and CEO of My Growth Fund Venture, Vusite Mekwaya, for a candid conversation on what it really means to win. If you want to catch this special, join us on April 1 at 6:30 p.m. on CBX. Your region, your business, your source.
The local news is brought to you by Derrimon Trading, better from the start. The Development Bank of Jamaica, facilitating economic growth and development. Caribbean Flavors and Fragrances, tease the senses, and Pulse Investments. Welcome back to CBX Business News. We begin with a sharp turn in Jamaica's economic performance, one that is redefining the country's growth outlook. Jamaica's economy has suffered a sharp reversal, contracting by 7.1% in the final quarter of 2025, as the impact of Hurricane Melissa rippled across key industries. At the Statistical Institute of Jamaica Statin quarterly press briefing on Tuesday, Director General Lisha Delati-Badir says the decline was felt across both goods and services industries, with agriculture and tourism-related activities among the hardest hit.
For the October to December 2025 quarter, the economy contracted by 7.1%, resulting from declines in both the goods producing and services industries. The goods producing industries declined by 10.7%, and this was largely attributed to declines in agriculture, forestry, and fishing, which contracted by 17.7%. The services industries contracted by 5.9%. We saw all services industries recording a decline except for finance and insurance and public administration and defense. Accommodation and food services contributed the largest to the decline. This industry fell by 31.0% and accounted for 42.4% of the overall decline in the services industries.
But the bigger story is what this means for the year as a whole. After earlier gains, the late year contraction has nearly erased growth, with the economy expanding by just 0.1% in 2025.
This resulted in a marginal growth rate of 0.1% for the 2025 calendar year, with a nominal GDP for 2025 at $3,612,266,000,000.
That was Statin's Director General, Lisha Delati Badir. We move now to a warning on Jamaica's economic potential. Prime Minister Dr. Andrew Holness is sounding the alarm on what he describes as deep-rooted structural barriers holding back opportunity, pointing to crime, congestion, and inefficiencies across both public and private systems. Speaking at the St. Anne Chamber of Commerce banquet recently, Holness made a direct link between crime and economic output, arguing that high levels of criminal activity are reducing the value of Jamaica's tourism and service sectors, two of the country's most critical revenue drivers.
So the question as it relates to productivity is why? Why do they have a higher value service industry in tourism than we do? There are many reasons. Many reasons. I want to focus on one just now. Barbados has less crime than us. So I'm speaking to the business people here, but I'm also speaking to the people in the community and the people in the markets and the people at the bus stop. Why do we have more crime here? Not many reasons. But one of it is that we tolerate it as a people. We are ambivalent about it as a people.
That was Jamaica's Prime Minister, Dr. Andrew Holness. Jamaica is entering a new phase of capital market development as the launch of the Government of Jamaica GOJ bond trading platform positions the country to lower borrowing costs while unlocking deeper liquidity in its financial system. The platform, operated by the Jamaica Stock Exchange JSE, introduces a centralized electronic marketplace for the trading of GOJ securities, replacing what officials describe as a fragmented and largely opaque system that limited price discovery and investor participation. Speaking at the launch on Tuesday, Finance Minister Favour Williams says the reform is designed to improve how government debt is priced, with greater transparency expected to drive more competitive yields over time.
We are expecting that this development and trading of government bonds will reduce interest rates for the government over time, and we know that interest rates, a 1% reduction in interest rate means several billions of dollars for the government in terms of a reduced interest expense on the debt that we have. And so I'm really looking forward to the ramping up of the market and for the transparency that will be provided.
That was Jamaica's Finance Minister Favour Williams. In financial news, West Indies Petroleum WIP Terminal Limited is reporting a sharp turnaround in profitability, with net income more than doubling to $2.46 million in 2025, up from just over $1.04 million the previous year. Revenue climbed to $8.83 million, reflecting increased throughput activity across its petroleum storage and distribution operations, while disciplined cost management helped expand margins. The improved performance comes despite rising operating and financing pressures, including over $850,000 in finance costs and higher impairment charges on receivables, signaling tighter credit conditions within parts of the market. Still, the company delivered a significant uplift in profit before tax to $2.72 million, underscoring stronger core earnings from its terminal operations. On the balance sheet, total assets edged up to $42.39 million, supported by increased receivables and related party balances, while retained earnings expanded to over $9 million, strengthening shareholder value. Meanwhile, the group continues to navigate structural risks, including a fully impaired $7.25 million promissory note, highlighting ongoing exposure to credit uncertainty within its investment portfolio. In other news, Jamaica's central bank is maintaining its monetary policy stance as rising global risks threaten to push inflation back above target. The Monetary Policy Committee, MPC, of the Bank of Jamaica BOJ has kept its benchmark interest rate unchanged at 5.50%, signaling that current conditions remain appropriate to guide inflation towards its 4 to 6% target range over time. The decision comes as inflation stood at 3.9% in February, below target, but is now projected to trend upward through 2026. MPC Chairman Richard Biles points to rising international prices for oil, liquefied natural gas, fertilizer, and shipping, driven by the ongoing Middle East conflict as key drivers of future inflation. The bank warns that risks are skewed to the upside, meaning inflation could exceed projections, particularly if global tensions intensify or domestic demand strengthens during post-hurricane recovery. At the same time, economic growth is forecast between 1 and 3%, although risks to that outlook are tilted to the downside, especially for tourism and related services. In the meantime, the bank says it stands ready to adjust policy if inflation pressures accelerate. We move to the latest updates from the JSE equities. Overall market activity resulted from trading in 114 stocks, of which 45 advanced, 59 declined, and 10 traded firm. Leading the winners are MFS Capital Partners, Jamaica Stock Exchange, Everything Fresh, and Elite Diagnostic, while leading the losers are ISP Finance Services, 138 Student Living Jamaica Variable Preference, Cygnus Credit Investments 10% Preference Shares Class H, and the Limnas and Bards. The main index remained at 346,087.15 points. However, the junior market index declined by 43.65 points to close at 3,364.99 points. It's time for the Market Education feature, brought to you by CARICRIS, Regional Ratings, Global Standards. As we near the end of our investment education series, today we're defining the term weight. Weight refers to the proportion of a portfolio invested in each asset, usually expressed as a percentage. How a portfolio is weighted helps determine its overall risk level and potential return. For example, a portfolio with a larger allocation to money market instruments is generally lower risk and offers more stable but modest returns. In contrast, a portfolio weighted heavily towards equities carries higher risk and greater volatility, but may deliver stronger returns over the long term. That was the Market Education feature, brought to you by CARICRIS, Regional Ratings, Global Standards. And that's it for the local news segment. Please stay with us. The regional news is up next. Is brought to you by Derrimon Trading, better from the start. The Development Bank of Jamaica, facilitating economic growth and development. Caribbean Flavors and Fragrances, tease the senses, and Pulse Investments.
The first quarter of 2026 is almost over. The plans are made, goals were set, but are you really executing? I'm Rondine Williams, and I sat down with global strategist and founder and CEO of My Growth Fund Venture, Vusite McGuire, for a candid conversation on what it really means to win. If you want to catch this special, join us on April 1 at 6:30 p.m. on CBX. Your region, your business, your source.
Welcome back. And now for the regional business news. A growing financial imbalance is emerging in the Eastern Caribbean following an alarming report that the financial system is sitting on billions in unused cash while businesses struggle to access financing. Speaking at the launch of the Eastern Caribbean Central Bank ECCB Strategic Plan 2026 to 2031 on Tuesday, Governor Timothy Antoine says commercial banks across the currency union hold more than $28 billion in deposits, but only about $16 billion has been lent. He describes the gap as excess liquidity, warning that it is holding back private sector expansion.
As we speak in our banking system, we have over $28 billion in deposits, and we have only about $16 billion in loans. So we have excess liquidity. Again, are we going to curse the darkness and lament, or are we going to light a candle?
Antoine says the ECCB is now looking to close that gap by pushing more capital into the real economy. Through its partial credit guarantee program, the bank has already facilitated more than 300 loans valued at around $30 million.
That's why we brought the partial credit guarantee program. It is intended to leverage that excess liquidity and make it available to small businesses which otherwise would not have access, by providing those guarantees. And we are going to bring the collateral registry, the secured collateral registry, which is again to help small businesses. So whether you have inventory, accounts receivable, you can use that as collateral to access credit.
He says the partial credit guarantee program is designed to make credit more accessible.
For those who don't know what that means, let me be very quick. If you go for $100,000 and you qualify under the program, the program will offer a guarantee of about 75 or 80%. So it means for the bank, the exposure is not $100,000. It is $25,000 or $20,000. That makes it far more attractive for the bank to lend because they have a lot less to lose in terms of risk or funds at risk.
That was ECCB Governor Timothy Antoine. We move now to another alarming revelation. Chronic non-communicable diseases, NCDs, are costing Barbados an estimated $140 million each year in lost productivity, putting pressure on the country's workforce and economic output. The figure was disclosed by Minister of State in the Ministry of Health, Davidson Ishmael, during the recent launch of the Live Stronger, Longer Diabetes and Hypertension Association of Barbados and Republic Bank Blue Wellness Conference. He says conditions such as diabetes and hypertension are reducing work hours and lowering overall economic performance.
Hours, man hours, time that is lost because of illness, preventable illness, largely preventable illness. And I know oftentimes we put the numbers of mortality tied to NCDs, and we don't often focus on the morbidity that is also caused by NCDs. There are a lot of persons who don't die right away, but they live with these conditions for many years, and it has a long-term impact, negative impact on their ability to contribute positively to society. 8 out of 10 of our adults are dying as a result of largely preventable diseases. That is a startling statistic. It is worrying to us in the Ministry of Health and Wellness, and that's why we continue to put significant resources behind not only the prevention, but also the treatment of NCDs across our island. In fact, that figure goes to about $375 million, upwards to $825 million a year.
That was Barbados Minister of State in the Ministry of Health, Davidson Ishmael. In financial news, Point Lissa's Industrial Port Development Corporation is reporting a sharp decline in profits for 2025 as lower investment gains impacted overall performance. The company posted net income of 95.9 million Trinidad and Tobago dollars, down from 193.2 million in 2024. Despite the drop in profits, revenue rose to $440 million, driven by increased activity across its port and industrial estate operations. However, the decline was largely due to a significant fall in unrealized gains on investment properties, which dropped to $49 million from $153 million a year earlier. Operating profit also fell to just under $120 million as administrative and operating costs increased. The company remains a key player in Trinidad and Tobago's logistics and energy sector, supporting trade and cargo movement across the region. It's now time for news from the Trinidad and Tobago Stock Exchange. Overall market activity resulted from trading in 20 securities, of which 6 advanced, 4 declined, and 10 traded firm. Today's winners are JMMB Group, Grace Kennedy, Ansa McCall, and Trinidad and Tobago NGL, while leading the losers are Unilever Caribbean, First Citizens Group Financial Holdings, Massey Holdings, and National Enterprises. Trading activity resulted in the following movements. The All TNT Index declined by 3.20 points to close at 1,338.15. The Composite Index declined by 0.99 points to close at 931.85. The Cross-Listed Index advanced by 0.20 points to close at 69.59. The SME Index remained at 91.16. And we take a short break. But please do stay with us. The international news segment is up next. In international news, Germany's DAX 40 surged 2.7% to close at 23,298.9 on Wednesday, rebounding after its worst monthly performance since March 2020, as optimism builds that tensions with Iran could begin to ease. U.S. President Donald Trump signaled that American troops could be withdrawn within 2 to 3 weeks, regardless of whether a formal agreement is reached. Meanwhile, Iran's leadership has indicated a willingness to consider a ceasefire, provided sufficient security guarantees are in place. On the corporate front, Siemens Energy and Rheinmetall led gains, rising 6.8% and 6.6% respectively. Other major stocks, including Airbus and Deutsche Bank, also advanced strongly, signaling broad-based investor confidence. In contrast, BASF was among the few decliners, falling nearly 3%. And that improved risk sentiment is also lifting markets in the UK, even as underlying energy risks remain firmly in focus. The FTSE 100 climbed 1.7% on Wednesday, reaching a 2-week high as investors responded to signs of easing geopolitical tensions. Optimism was reinforced after President Donald Trump suggested that the Iran situation could be resolved within weeks. However, concerns persist around the Strait of Hormuz, where disruptions continue to threaten global oil supply, even as Brent crude slipped below $100 per barrel. Gains were driven primarily by financial and travel stocks, while declines in energy giants BP and Shell limited the index's upside. Meanwhile, Babcock International secured a 6-month contract with the UK Ministry of Defence, while Berkeley Group maintained its outlook but flagged caution on new land acquisitions. Meanwhile, Australia is taking direct action to ease pressure on businesses and critical industries. The Australian government is rolling out targeted relief measures to support small businesses and the freight sector as rising costs and global disruptions continue to strain operations. Speaking in Parliament on Wednesday, Minister for Infrastructure, Transport, Regional Development and Local Government, Catherine King, confirmed that the Australian Taxation Office, ATO, will provide temporary relief to businesses unable to meet their tax obligations.
The Treasurer, alongside the Minister for Small Business and the Assistant Minister, announced that the ATO will provide temporary relief to businesses unable to meet their tax obligations. We're also making it easier and faster for small businesses to access credit and working with banks on options for loan deferrals and other supports for customers doing it tough.
And beyond the small businesses, those same cost pressures are now hitting Australia's transport and logistics sector. Australia's transport and retail industries are welcoming a new round of government measures aimed at easing rising fuel and logistics costs. Minister King says discussions with the Australian Trucking Association highlighted the severity of cost pressures facing road freight operators, particularly from elevated fuel prices.
This morning I spoke with the Australian Trucking Association, who told us these changes will really help road freight operators feeling the pinch of high fuel prices. Road Freight New South Wales said it provided immediate and meaningful relief to operators, and the Australian retail sector has called the measures critical for retailers facing increased freight and shipping costs. This, of course, builds on the work that we've already done, releasing 20% of the minimum stock holding obligation, underwriting additional cargoes so we can get more fuel, fertiliser and other essential goods into Australia, amending the fuel standards for petrol and diesel to allow more supply into the market.
That was Australia's Minister for Infrastructure, Transport, Regional Development and Local Government, Catherine King. And that's it for the international segment of the newscast. The news recap is coming up on the other side of the break.
Mikey, is what sweet you saw?
Yeah, dear babes. Where's the catty? You ain't go party tonight.
Party? You secure your future yet? I'm careless.
Did you know that over time the stock market has provided a reliably high return on investments? Be sure to contact a licensed stockbroker for more information on this exciting investment opportunity.
Taking care of business, Mikey?
Yeah, catty. I securing my future. Want to come look over my stock portfolio?
The Jamaica Stock Exchange, providing a fair, efficient, and transparent stock market.
And now to recap our top stories. In the local news, Jamaica's economy contracts over 7%. Growth stalls at 0.1% in the final quarter of 2025. Regionally, ECCB targets idle billions to boost private sector, flags $12 billion credit gap. And internationally, Australia offers tax, freight relief as cost pressures rise. Those were the stories making today's CBX Evening News. On behalf of the entire production team, I'm Rashel Moncrieffe. Thanks for watching CBX, your region, your business, your source.
From seed to sale, Jamaica's future grows through innovation. Introducing Export Jamaica, a global market intelligence and compliance gateway that connects your effort with global opportunities and makes international trade easier, safer, and more convenient for Jamaican businesses. Powered by the Jamaica Trade Board Limited, Export Jamaica is designed to position your products competitively and guide you through international trade. Find high-demand international markets. Gain access to trade analytics that guide your business decisions. Identify and engage with potential buyers. Know your costs up front. Trade confidently. And keep your exports safe and secure. Through Export Jamaica, you can discover all there is to know about exporting and grow your business sustainably.
From the processing of your goods, to packaging and shipping, to seeing your products reach international shelves and enjoyed by customers abroad, Export Jamaica provides the market intelligence and insights behind each step, helping you identify demand, understand export pathways, and unlock financial growth.
Say hello to a prosperous future. Visit tradeboard.gov.jm/Export Jamaica to sign up today. Expanding Jamaica